Welcome to Chapter 2, Money Management Skills, Financial Statements, and Budgeting, bum, 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 which is a fairly generic name for this most important chapter because in this chapter we're going to create the two most important financial documents that every household needs. Certainly every business has these. But if I were going to name it something more whimsical, something more possibly useful to people, I would call it "We Spent How Much on What?" And why is that? Well, because when we used to meet face to face, remember those days? And we would be able to utilize a computer lab. We'd all get together in the computer lab, and people would be creating their financial statements together. Well, they're on their own machine, but we do it in the lab, and I'd be running around and trying to help as many people as I could. You would hear people say this: "I'm spending how much on what?" you know, yeah, I'm spending how much on coffee? How much on lunch? How much on my telephone? It's wow, it's a lot of money over the year. And that's what these statements do for you, specifically the cash flow statement. So stick with us here. First, let's get some definitions and the like out of the way. Money management defined: the day-to-day financial activities necessary to manage current personal economic resources while working toward long-term financial security. That sounds kind of like the definition for financial planning, doesn't it, from chapter 1? Yeah. Sometimes you'll hear this in a household if you're privy to that argument at the end of the month. How come we always have too much month at the end of the money? Um, One of the cool things about working for a school district is they pay you once a month. And if you didn't have any discipline before you started working for them, oh my goodness, oh, don't you need that because you have a whole month until you get your next paycheck. And I went from getting paid once a week to getting paid once a month. I learned pretty quickly. Here are some major money management activities: store and maintain personal financial records and documents. So, if you're looking for one of those non-financial goals, maybe this could be one of one of those non-financial goals is to organize your financial records and your documents. Create your personal financial statements, the cash flow statement and the net worth statement, and we're going to spend a lot of time on those. Um, they are the most important. I've already said this. I'm repeating myself. My apologies, but they're, in my humble opinion, the most important financial documents that everybody needs to have. Most people have an idea where the money goes, but no, when you see it on that cash flow statement, oh my goodness. Create and implement a plan for spending and saving. We don't like to use the budgeting word, but that's what we're doing. We are creating a budget. I know it's hard to say. Just say cash flow statement. Okay, why should you keep financial records? Well, there are many benefits helping you make spending decisions, plan for the future spending, pay your bills on time, see your changes in net worth. At first, this isn't going to be that important for younger folks, but as you join the benevolent machine, trade your life for your paycheck, the paycheck for the rent and the orthodontia and the car payments and the veterinarian bills, the net worth statement is a good place to see how have we gone, how far have we gone. To make good investment decisions, to prepare for income taxes, that's chapter 3. And preparation for applying for a loan, we'll discuss that when we get to chapter 5. But sure, if you have your financial statements and you walk into the loan office with the financial statements, well, now it's all computerized, right? You don't even get to meet a loan officer, but they will be duly impressed. And my most important reason is so you know what's happening to your money. We spend how much on what? Now, a home file is very important, but in my humble opinion, you should be careful about putting certain sensitive, important documents in there. But employment records, tax records, financial services, money management, credit, consumer purchasing, insurance, investment, housing and car records, and estate planning and retirement records. Yes, this is important information. And if it were stolen out of your house, or if, heaven forbid there were a fire or something like that, they're fairly easy to reconstruct, especially with the infernal net and everything being stored on the internet. But what about things that are difficult, hard to replace, such as birth, marriage, and death certificates, citizenship, military papers, adoption and custody papers? The insurance companies ask you, and we'll discuss this when we get actually to chapter 8 and automobile and home and auto insurance. Uh, Keep photos of valuable items in case they are stolen or lost. Account number information, I think that's okay having it in the house, but some people think it's too sensitive to have that in the house. Mortgage papers, insurance policies. Who has stock and bond certificates anymore? We're going to see some stock and bond certificates, but they're from an a different age. And then if you do have coins and collectibles and estate documents, wills and the like, those are important. I am a little strange, I think, because I keep the car titles in the safety deposit box. A lot of people think I'm a little too strict, too severe in this case, but I think they're important, especially if you want to sell the car. But we keep our cars until the point where they're really not even sellable. Now, what about having a home safe? Some safes are pretty amazing. In fact, they've come down in price quite a bit. But if you get one of these little tiny things that people just pick them up and take them with them, the thieves they just don't bother to try to break into it. They just pick it up and leave with it. But now you can buy a pretty decent safe that just can't be picked up and moved easily for not a whole lot of money. So maybe a home safe might be good for you. But if there is a fire, the safe will be fine. The papers inside, right, not so much. They'll be burnt to a crisp. Yeah. Now, where should you keep your vehicle registration? The CHP, they say, put it in your car. Well, I keep a copy in the car, folks. I don't know. Again, I might be a little paranoid, but I keep a copy in the car, not the original. If you have estate documents, often your lawyer will keep a copy. Now it's all electronic, and the executor. And then what about your home computer? Again, I'm more paranoid. I think people think I'm a little overly paranoid, but I have a encryption program. So they could steal the computer, but they won't be able to gain access to the contents. I know maybe Putin's boys and girls or Xi Jinping or the no such agency, National Security Agency, they could get into it. But I ain't that important, folks. But any crook is not going to be able to do anything with the computer. I mean, they could wipe the hard drive clean and start all over again, but my data is encrypted. And then again, I think I might be a little overly cautious, but I think it's important. I have a service that encrypts the data and puts it on a server, encrypted with the best, again, if the NSA or the Ruskies or the Chinese wanted to get in, I'm sure they could get in, but I'm not that important. So I think it's important to have your data encrypted, but you decide. Okay, so now let's get to the meat of chapter 2. Successful budgets are well planned, realistic, flexible, clearly communicated, and next to impossible. Does budgeting ever work? Well, for some people, yes. Some people, not so much. So what we want you to do is remember the mantra that we taught you in chapter 1. Saving is easier than budgeting. Spend less than you earn, live beneath your means, pay yourself first, make love, not loans. For those of you old enough to remember, or if you're into vinyl music, do I sound like a broken record? A broken record? A broken record? Because a budget implies pain and suffering, and people don't like that. If you institute an automatic savings plan, and not saying you have to do it right away, folks. Wait till we get to investments at the end of the semester, or take Introduction to Investments if it's still time to take it. Well, you can go online; it's free to take. You won't get college credit. You'll find there's an old saying. Some people like it, some people don't. Take care of the pennies, and the dollars will take care of themselves. So if you pay yourself first, you spend less than you earn, live beneath your means, you won't worry about budgeting because you'll always be putting away that amount for the future. Doesn't mean you shouldn't try, right? And that's what the cash flow statement's going to do for us. But saving is easier than budgeting. Here's the extreme viewpoint. We talked about that book, Your Money or Your Life. These people recommend that you keep a notebook with you at all times. Record every monetary transaction. In fact, there's an article on the website, I think in Canvas also. No matter how small, and then update your cash flow statement constantly. And we're going to show you how to do this, folks. We're going to show you how to use the cash flow statement, and then every month record all the transactions, and then put them in the whole year's worth of information. If you do that, you will know where your money is going. And you will say, oh my goodness, we spent how much on what? Yeah, right. One perfect example. I was helping somebody create their cash flow statement, and they were paying $90 a month for a storage unit. Now, it doesn't sound like a lot of money, but the cash flow statement is going to show you that $90 a month is $1,080 a year. And that's a chunk of change. And so she was quite blown away by the fact that she's spending over $1,000 a month to keep this stuff in storage. And I said, well, what's in it? I mean, how much is it worth, the stuff that you're in there? She goes, maybe a couple $100. She goes, it's mostly all just junk. And I didn't know what to say. There was a moment where we sat in silence, and she looked at me and she said, yard sale. I said, yes, time for a yard sale. Get rid of it and stop paying $90 a month to store something that's worth a couple $100, maybe not. I never found out how much she got from the yard sale, by the way. So would you do this? Would you keep a small notebook, or there's apps for that, applications on your cell phone? Do it for 3 weeks. Okay, do it for 3 weeks and see how you like it, right? And as I said, there's an article about that it can change your life. And that's what these people do. The Money or Your Life folks. They want to know where every dime is going. So now, let's get to these personal financial statements. Now, relax, folks. If you've taken accounting, no, this is not accounting. No journal entries, no credits and debits, no trial balance. Don't go screaming into the night. We just pull these numbers from our checkbook, our bank account, or from just what we know to be true. And the accountants actually cringe when we use these terms. They don't use the term net worth statement. They use the term balance sheet. They don't use the term cash flow statement for what we are doing. They cringe when we use the cash flow statement for what they call an income statement, or the old name was profit and loss. A cash flow statement in accounting is something completely different. And if you take the accounting class, or if you take the Introduction to Investments class, you'll learn that it's basically a fairly sophisticated way for corporations and other large entities to know where their money is going, where the cash is going, how the cash, not the income. It's a little subtle that way. So don't worry about it. We're not worried about it in this class. What we're going to do is we're going to take a snapshot of our financial situation. That's the net worth statement, also called the balance sheet. Assets, what we own, versus liabilities, what we owe, our debts. That's our snapshot. The movie is the more important thing. It's the moving part of our finances. And that's the cash flow statement. Again, the accountants call it an income statement. It's what's coming in the door through income, and that's usually fairly straightforward, and what's going out the door, expenses. And that's where life can get really messy because you write down all these expenses and you think, okay, I got them all, and all of a sudden 2 months later, oh, I forgot that we take the dogs to the groomers every 3 months, or karate lessons. So that's going to take a little bit of time to hammer out, but it's worth it. It's worth it. Once you see that movie, for people just starting out too, the cash flow statement's more important than the net worth statement. But eventually the net worth statement does become more important. Let's look at each one in detail. Here are the components of the net worth statement. And I want you to remember that it's also called the balance sheet. Okay, it's going to be on the test. But still, you should know that it's called a balance sheet. And why is it called the balance sheet? Well, because before computers and copy machines and all that, they used to put the assets on the left and the liabilities and the net worth, what the accountants called equity, on the right-hand side, and the two had to balance. That's why it's called the balance sheet. Net worth statement is better for us. So we put our assets, what we own, and then we put our liabilities, what we owe. And as the accountants, we talked about this just a tiny little bit, they separate everything into either current, which is 1 year or less, which what we call short term, and then anything above 1 year to the accountants is long term. Well, that's not true for us in the financial world. We have intermediate term, 2, 3, 4, 5 years, and then long term 5, 10, 20, 30 years. So just remember that. But again, it's not important. That's for the accountants. So you take your assets, total them up, take your liabilities, total them up, total debts, and what's left over is your net worth. Now, insolvency in some cases means that your liabilities far exceed your assets. And that's not necessarily true. You can have your liabilities greater than your assets. And a lot of people, especially students who are taking on student loans, have that situation where they have what's called negative equity or negative net worth. It doesn't mean they're insolvent. They're still being able to pay their bills. But there's a rule of thumb. If your short-term liabilities, specifically your credit card debt, becomes greater than or equal to your income, then you're in trouble. If you're making $30,000 a year and you have $30,000 in credit card debt, yeah, you're in trouble. And it doesn't mean you're necessarily going to go through bankruptcy, but that's the rule of thumb. So remember this, because now that's the snapshot, the balance sheet. Because what we're going to do now is take a look at the cash flow statement. This is where insolvency is better determined. Can you service your debt? Can you pay the bills? Can you pay the debt payments, the loan payments? And so this one's the trickier one. The balance sheet, the net worth statement, those are pretty straightforward. What do I own? What do I owe? What are my assets? What are my debts? Whereas the income, the cash inflows, is normally pretty straightforward, although some people have seasonal work, or they have a part-time job, or they have a business and it's seasonal. You get an idea over the long term what your average salary is. Sometimes it's really great, sometimes it's not so great. But other people have a pretty good idea what they make every month, every week, whatever. But then it's the cash flows, the expenses that drive people nuts. Well, some are straightforward. Fixed incomes, fixed expenses such as car payments and rent and the like. But then the variable expenses, how much do we spend on gas? How much do we spend on utilities, on food? And our net cash flow could be a surplus or a deficit. And this is where insolvency is better determined. Because we said in chapter 1, how could somebody making $200,000 a year wind up in bankruptcy court? If they're spending $250,000 a year, they're eventually going to be insolvent. Now, we use this as a basis for creating our spending, our saving, and investment plan. And as we said, these two documents are the most important documents. And for the vast majority of people just starting out, the cash flow statement, the income statement is the most important. Now, in the face-to-face class, we would then start working on these in the lab together, and we would show you. I would show you how to use. I would show the class how to use the spreadsheet, and you don't have to use the spreadsheet, folks. You can just do it with pencil and paper and a 99-cent calculator. But boy, the spreadsheet makes life so much easier. So what I hope you will do right now, don't wait, is run on over to the presentation on how to use the either Excel spreadsheet from Microsoft, or the Google Docs spreadsheet, which is free to use, and all you need is a Google account. So run on over there right now and create your financial documents, and realize that it's going to take a while. It's going to take a few months for you to fine-tune these documents. But in my humble opinion, they are essential. You just can't get a good handle on your personal finances if you don't know where the money's going. So that cash flow statement and the net worth statement is important too. But it's, as we said, don't be surprised, especially if you're a student taking out student loan debts. You're going to see that the net worth statement is negative. You have negative assets. But again, you're starting off young. Don't worry about it. It's the cash flow statement that you really want to key on. Okay? So that's chapter 2, folks. It's short and sweet, but it's so important. So and that's, by the way, that's your assignment. You're going to do a cash flow statement and a net worth statement. And good. We are so proud of you, dear students. We hope you're getting an education. We want this to be the best class you've ever taken. If you have any comments, suggestions, questions, complaints, we want to hear them. We want you to be awesome.